Hello friends, welcome to Bankers Platform. So friends, today we have come again with a new video, and this video is the second part of the previous video that we have started the series, that is FAQs on foreign exchange. Okay, so last time this is the circular from the RBI website only. We have taken these FAQs, and last time we have already discussed up to three pages. Like this first page we have already discussed, second also we have discussed, and we were supposed to discuss now. This third page was also discussed. Okay, so now we have the next page, that is the fourth page. So fourth page will start the discussion. So this is the second part. So if you are first time watching this video, so I will suggest you that you should watch the first part of this video, then only the second part will be helpful for you. Or you can also watch this part also, and then you can watch the first part. Okay, so whatever we are going to discuss here, that will be very, very helpful for certificate course in foreign exchange operations exam. And also it will be helpful for foreign exchange facilities for individuals. So these both exams will be covered. Whatever the questions and answers which are available here, there are a lot of chance, a lot of probabilities there that questions can be asked from this set of question. Okay, so without wasting our time, let's start. So in the last we finished that what are the prohibited items under scheme. Okay, so what are the prohibited items that we have already discussed, and now we will be discussing what are the purposes under FEMCAT Amendment Rule 2015, under which a resident individual can avail of foreign exchange facility. So what is this FEMCAT? So what is this FEMCAT? So it is Foreign Exchange Management Current Account Transaction Amendment. Okay. So this is Foreign Exchange Management Current Account Transaction. So it is related to that. So individuals can avail foreign exchange facility for the following purpose within the LRS limit. That is 2.5 lakh USD on a financial year basis. So what are the facility that they can avail? Okay, and this foreign exchange facility for individual, in that exam many times from here 2 to 3 marks question has been asked. Okay, so if you know it, then it will be very helpful for you. So here you can see first is private visit to any country except Nepal and Bhutan. So except Nepal and Bhutan, if they're doing any private visit to any country, they can avail foreign exchange. Okay. Second is gift or donation, going abroad for employment, immigration, maintenance of close relative abroad, travel for business, attending a conference, okay, or a specialized training, or for meeting expenses for meeting medical expenses, checkup abroad, accompanying as attendant to a patient going abroad for medical treatment or checkup. Okay, expenses in connection with medical treatment abroad, okay, studies abroad, any other current account transaction which is not covered under the definition of current account in FEMA 1999. So for these all type of purposes, the resident individual can take the avail the foreign exchange facility. Okay, so next is the AD bank may undertake the remittance transaction without RBI permission. So you have to remember that for these all type of transaction, RBI permission is not required. Okay, so that can be done without the RBI permission. So, which are not prohibited or restricted. So, if something is not prohibited and restricted under Schedule 1, 2, or 3 of FEMCAT Rules 2000, as amended or are defined in the FEMA 1999. So, it is for the AD to satisfy themselves about the genuineness of the transaction as hitherto. Okay. So, AD has to satisfy. So, RBI has put the responsibility on authorized dealer on the banks that they have to be satisfied for the genuineness of the transaction. Okay. So now next question is under LRS, are resident individuals required to repatriate the accrued interest or dividend on deposit or investment abroad over and above the principal amount? Okay. So the answer is no. The investor can retain and reinvest the income earned from portfolio investment made under the scheme. However, a resident individual who has made overseas direct investment in the equity share and compulsory convertible preference share of a joint venture or wholly owned subsidiary outside India within RRS limit, then he or shall uh, have to comply with the terms and condition as prescribed under foreign exchange management, transfer or issue of any foreign security regulation. Okay, so whatever resident individual required, they have said that no, the investor they can retain and reinvest the income made, but they cannot repatriate. Okay, whatever they have done abroad, and whenever they are doing means when they are getting it okay back, so they have to follow the rules and regulation of this act, transfer or issue of any foreign security. Can a remittance under LRS facility be consolidated in respect of family member? Okay. So remittance under facility can be consolidated in respect of close family member subject to the individual family member complying with the terms and conditions of the scheme. However, clubbing is not permitted by other family member for capital account transaction such as opening a bank account, investment, purchase of property if they are not the co-owners or co-partner of the investment property overseas bank account. So further, a resident cannot give to another resident in foreign currency for credit of the latter foreign currency account held abroad under LRS. So here they want to tell that if a person is there resident, okay, he cannot, a resident person cannot give to another resident person when what he cannot gift foreign currency. Okay, for the credit of the latter means if he is gifting to somebody and this other person will transfer the money abroad. So that is not possible. Okay. So that is not possible. That is not correct. That you have to remember. Possible if like there are loopholes in the system. Okay. So it may be possible, but that is not correct as per the rules and regulations. Once they are caught, penalty, heavy penalty will be applicable on this type of transaction. Okay, so here you have to remember that consolidation means clubbing can be done only with the close family members. Okay, let's see next question. Is the AD required to check permissibility of remittances based on nature of transaction or allow the same based on remitter declaration? AD will be guided by the nature of transaction as declared by the remitter in Form A2. So friends, you all would be remembering that what is Form A2? Form A2 is very important. Okay, so what is Form A2? You can write in the comment section. Form A2 is the form that will be submitted by the resident individual for making outward payment. Okay. Whenever any person in India, they want to send money in India, they want to send money abroad. Okay. If they want to send the money abroad, what they have to do? They have to fill Form A2. It is applicable in all the banks. Okay. In all the banks, it is mandatory that they have to fill Form A2 for sending the money abroad. By this form only, they can send the money abroad. Okay, so they have to remitter, they have to declare in Form A2, and after that, certify the remittance is in the conformity with the instruction issued by RBI. So suppose any person is giving that I want to send outward remittance. Okay, outward remittance they want to send. So what you have to do, you have to see whether this transaction is permitted, it is allowed. If it is allowed, then only you can go for the transaction. If it is not permitted, then you cannot make that transaction. Okay, so instruction issued by RBI in this regard from time to time. However, the ultimate responsibility is of the remitter. Ultimate responsibility of the remitter to ensure compliance to the extent FEMA regulation, rules and regulation. So whatever, like whatever he is giving, and suppose the banker skip something. Okay, banker has skipped something. So ultimate responsibility belong to remitter who is sending money abroad. It is his responsibility that all the guidelines of FEMA rules and regulations are followed. Okay, that strictly to be followed. And if there is a contravention, then they will have what? They will have heavy penalty. Penalty they will have, and they will also have the fine. So many things will be there, and whatever the penalty and fine related to foreign exchange, that is very heavy. Okay. So next, is it mandatory for resident individual to have permanent account number, that is PAN, for sending outward remittance under the scheme? So yes, it is mandatory. So already this question is also asked in the foreign exchange exam. So you have to tell that PAN is mandatory. PAN is mandatory for making any foreign payment. Okay. For making any foreign payment, PAN is mandatory for all transaction under LRS through authorized person. Are there any restriction on frequency of remittance? So it is asking frequency. Okay. So there is no restriction. There is no restriction on the frequency. So suppose a person is having 2.5 lakh USD limit. So he can do in like sometime he can send $1,000, sometime he can send $10,000, sometime he can send $1 lakh. So that depend on the person. Okay, whenever he want to send. So there is no restriction on the frequency of the remittance under LRS. However, the total amount of foreign exchange purchased from or remitted through all sources in India during a financial year should be cumulative limit 2.5 lakh USD, 2 lakh 50,000 USD. And once a remittance is made for an amount 2 lakh 50 during a financial year, a resident individual would not be eligible to make any further remittance under the scheme, even if the proceeds of investment have been brought back into the country. Okay, so sometimes there is a confusion that some customer will think that he has done some payment in SBI, some payment he has done in PNB, some payment he has done in SDFC. Okay, so suppose he has done 1 lakh USD in SBI, 1 lakh USD in PNB. So he is thinking to do 1 lakh USD in SDFC. So that is not possible. Okay, so in a financial year, he can do 2.5 lakh USD only. So only this much amount, 2.5 lakh USD only he can do. It doesn't matter that in which bank he has gone, okay, how many time he has done, but overall it should not exceed 2.5 lakh US dollar. That should be the criteria, because when he's doing the transaction, that time reporting will not be done at the same time. Okay, and even when the banks are reporting to RBI, so that reporting will take 15 to 30 days to reflect properly in the system. And once that reporting is done, and then RBI gets to know, okay, and then RBI gets to know that this payment the limit is breached, they will directly issue the letter and notice and peel in action, whatever they have to do, they will start all the proceeding. Okay, they will not wait for that, because whenever any person is doing any foreign remittance, okay, in any bank, okay, say it is SBI, PNB, BOB, any bank, so all the banks are sending the report. Okay, report they are sending of all the foreign remittance to RBI. So once RBI is consolidating from SBI, from PNB, okay, so whenever they are consolidating, then they will get to know what is the overall limit of the person. Okay. So these type of tricky questions are asked in the exam many times, so that you have to see, you have to answer very carefully. Okay. So resident individual, but not permanent resident in India, can remit up to net salary after reduction of taxes. However, if he has exhausted the limit 2.5 lakh as net salary remittance and desire to remit any other income under LRS, is it permissible as the limit will be over and above 2 lakh 50,000? So, resident individual who have permitted who have remitted their entire earning and salary and wish to remit further other income may approach RBI with documents through their AD for consideration. Okay. So this is only for that person who is not permanent resident of India. So suppose some NRI is there. Okay. Some NRI is there and he is having he's working in the some US embassy. Okay. So their salary will be more. Okay. So he's working in US embassy. So now he's in India. So he will also have the rules and regulation of resident Indian. Okay. So his salary may be high. So after 2.5 he is remitted, he want extra to remit. Then he has to approach RBI through AD. And this you also remember that no person can directly approach RBI. They have to approach through their banker only. And which banker? AD, authorized dealer. They have to submit all the things through their bank only. Then only RBI will consider that. Directly, they cannot approach the RBI. So next para 5.4 of APDIR Circular 106 dated 1st June 2015 states that applicant should have maintained the bank with the bank for a minimum 1 year prior to the remittance for capital account transaction. Whether this restriction apply to current account transaction. So no, the rationale is that remittance facility is up to 2.5 lakh LRS for current account transaction under Schedule 3 of FEMA FEMCAT amendment rule, such as private and all what we have already discussed. As FFMC cannot maintain account of remitter, the provision has been confined to capital account transaction. However, FFMC are required to ensure that know your customer guidelines and anti-money laundering rules in force have been complied with the with while allowing the current account transaction. Okay, so this is about like now whenever any person is coming to the bank, so if they are doing any capital account transaction, okay, so then it is a RBI guideline that that person should have minimum period of 1 year old account. Okay, the account should be 1 year old. That you have to remember for making outward remittance for capital account transaction, like for purchase of property and shares, debentures. Okay, so in that case, it should be 1 year, but for capital account, for current account transaction, that is not required. Okay, but KYC guidelines and AML guidelines to be followed. So next question, are there any restriction towards remittance to Mauritius and Pakistan with permissible current account transaction? So no, there are no restriction toward remittance for current account to Mauritius and Pakistan. So for current account, there is no restriction. So remittance directly or indirectly to the country identified by FATF. If any country is identified by FATF as non-cooperative country and territory from time to time, and remittance directly or indirectly to those individual and entities identified as posing significant risks of committing acts of terrorism as advised separately by RBI to the bank are not permissible. So generally there is no restriction for Mauritius and Pakistan for permissible current account transaction. But if if the amount is going to any restricted country, any country which is identified by FATF, then they have to take RBI permission or it is not permissible. Okay, that you can remember. So question number 12, what are the requirements to be complied with by the remitter? So what are the requirement of the remitter? So we will discuss this question. So before discussion, I would like to tell you that if you have not subscribed our channel, so do hit the like button and subscribe to our channel also because you are getting a lot of good things, good knowledge from our channel. So if you are getting something from our channel, so do hit the like button and subscribe button. And other than that, friends, we are having the courses and we are having the courses related to foreign exchange. We are having the full course on certificate course in foreign exchange operation exam. We are also having the mock test series for certificate course in foreign exchange exam and for international trade finance also. And also we are having the course related to certificate mock test series on foreign exchange facility for individual. So these are the courses which we are having. So if you are willing to do the course, you can just enroll by visiting to our website. This is the website link, and this link will also be available on the description box. Okay, so you can just click and link on the link of the website, and you can also download our app, and through app also you can purchase the course. Okay, so right now a good discount is coming. Like here you can see 40% discount is going and 50%. So 40 to 50% discount is going on our courses, and this discount is available till Sunday. Okay, so till 7th of September. This discount is available. After that, the prices will be hiked. Okay. So if you are willing to purchase the course, you can go for it. So in our this full course, what you will be getting, that you can be getting, that first is study material. Okay. Study material that will be in the e-PDF form. Then you will be getting the videos on various topics. Okay. And you will be getting the mock test series. With all these three, you will have a bonus option, that is doubt clearing. Doubt clearing on chat. Okay, via chat. So whenever you're downloading our app, so in that there is a chat option. Through chat option, you can raise your query and we will be answering. And if required, we will also have the callback service. Okay. So if you request a call, so we will call you back and clear your doubt on any topic. Okay. And other than that, if you are having the study material with you, okay, and you're having the knowledge of the subject, so you don't need study material videos. So I would like to suggest you mock test. Okay, because mock test series will help you in understanding what is the real scenario of the exam when you're going to take the exam. Because you have the knowledge, you have the practical knowledge, but once you attempt this mock test series, then you get to know your plus and minus point. Okay, where you are good, which topics are good for you. Okay, and where you need to work on. Okay, so that you will get to know. So this is for certificate course in foreign exchange operation and for international trade finance. So we are having the course which is very beneficial. And as a banker, you all would not be having that much time, because here time is the hack. Okay, so you will not have that much time to study the bulky material and go here and there, find out the previous year questions or what type of questions are asked. So we have compiled all the things, and these things will help you in clearing the exam. Okay, so I hope so. You understood what I want to tell. And if you are having any doubt, any query, you can just send an email to us, and in email we will be replying to you, and we can also call back to you for any doubt. Okay, so this is all about our courses, and let's move to the topic where we were. So, what are the requirements to be complied with remitter? So, what are the requirements? So, the individual will have to designate a branch of an AD through which all capital account transactions remittance under the scheme will be made. The applicant should have maintained the bank account with the bank for a minimum period of 1 year. Okay, so prior to remittance. So if anybody is doing the foreign remittance, so his account should be 1 year old. Okay, and that individual has to designate the AD branch. He has to see which AD will do his transaction. Because what is happening, that suppose any bank is there, SBI is there, or any bank is there, so they have the designated AD branches from where the transaction will be done. So that branch you have to designate where your transaction can be done. So for remittance pertaining to permissible capital account transaction, if applicants seek to make remittance is new customer of the bank, AD should carry out due diligence. Okay. Sometimes the customer can be new. That time the bank has to take the due diligence on the opening, operation and maintenance of account. Further, the AD should obtain bank statement for previous year from the applicant to satisfy themselves regarding the source of funds. If such a bank statement is not available, suppose bank statement is not available with the customer, so what you can do, you can ask for the copies of the latest income tax assessment order or return filed by the applicant may be obtained. And he has to furnish the form A2 regarding the purpose of remittance and declare the funds belong to him and will not be used for purpose of prohibited, regulated under the scheme. Okay, so these are the things that you have to comply in the practical banking also. That if a person is new, first of all, you make sure that the account is 1 year old. Okay, account is 1 year old, and if it is not 1 year old, then you have to see that the if the account is not 1 year old, then the banker has to do due diligence on the operation of the account. Okay, and one can you can ask the 1 year statement. Okay, 1 year statement of the bank where he is having the account already. And if that is also not available, then ITR copy can be asked from the customer. And we have to take Form A2, and we have to take the declaration that fund belongs to him. And it is not used for the purpose that is prohibited under this scheme. So next, can remittance made only in USD? So the remittance can be made in any freely convertible currency. So it is not like that that we have to make the remittance only in USD. So it's not compulsory only USD because for that guideline purpose, the RBI has told that in the financial year you can do 2.5 lakh USD, but it's not compulsory that you have to make the payment only in the in the US dollar. You can make the payment in any currency like Canadian dollar, Australian dollar, New Zealand dollar. Okay, any currency you can make, but when it's about the this restriction that you have to see whether it is within the limit, then we have to see as the equivalent amount. Okay. Suppose somebody is sending Canadian dollar. So he has to see that his dollar is equivalent and below 2.5 lakh USD. So it's not compulsory that only remittance can be made in US dollar. So our intermediary expected to seek specific approval for making overseas investment available to client. Okay. So banks include those not having operational presence in India are required to obtain prior approval. Okay. So if they are not having the banks, including those having not having. So those banks who are not having operational presence in India or the banks which are in India, they have to take the prior approval from RBI for soliciting deposit for foreign or overseas branches or for acting as the agent for overseas mutual fund or any other financial services company. So whatever the intermediaries are there, so they have to take RBI permission. Are there any restrictions on kind or quality of debt or equity instrument an individual can invest in? So no, rating or guideline have not been prescribed. Okay, so suppose somebody is doing the investment in equity, so there is no restriction which type of equity it should be. So that is the risk and responsibility of the remitter only. Who is investor? He has to see that. Okay. However, the investor is expected to exercise due diligence while taking a decision regarding the investment which he or she proposes to make. So whether credit facility in India, in Indian rupee or foreign currency can be extended by AD to resident individual. So LRLs does not envisage envisage extension of fund. Okay, so this you always remember whenever we are sending money abroad, whenever we are sending money abroad, so that money should not be of loan amount, except educational loan. Except education loan, it should not be any loan when we are sending the money abroad. So that only they're saying that LRS does not envisage extension of fund and non-fund based facility by AD to their resident individual customer to facilitate remittance for capital account transaction. So however, AD may extend fund non-fund based facility to facilitate current account. Okay, so current account, it can be done, but it cannot be done for capital account. And in current account also, It can be done mainly for education. Okay. Can bankers open foreign currency account in India for resident under LRS? No. Okay. So we cannot open foreign currency account in India for resident under LRS. So next is, can an offshore bank unit in India be treated on par with a branch of the bank outside India for the purpose of opening of foreign currency account by resident under LRS? That will be no. And what are the documents required for withdrawal or remittance of foreign exchange for purpose mentioned in para 1 schedule 3 of FEMCAT Amendment Rule 2015? So what is required? PAN number is mandatory for all transaction under LRS. So question number 20, whether document 15 CACB have to be taken in all outward remittance cases, including remittance for maintenance. So in terms of APDIR series, circular number 151, dated 30th June 2014, RBI will not issue any instruction under the FEMA regarding the procedure to be followed in respect of deduction of tax at source while allowing remittance to non-residents. It shall be mandatory on part of AD to comply with the requirement. So they are saying that related to Form 15 CACB. So when we are using Form 15 CACB, that you always remember whenever you are making any transaction by through NRO account. Okay. Because NRE account is which account? In which already the fund has come from abroad. So whatever the money is there, principal amount and interest amount, that is freely repatriable. Okay, freely repatriable abroad. But whatever the fund is in NRO, so in NRO mostly the fund will be Indian income. Okay, that will be Indian income, and this Indian income is in the NRO account. So that to confirm that whatever the fund is in the NRO account, on that all the taxes are paid. All the taxes are paid. The bank has to take Form 15 CA and CB from NRE in NRO account from the customer. Okay, what is Form 15 CA? 15 CA is the declaration. 15 CA is declaration on income tax website. Okay, on income tax website, the customer will give declaration that we have paid all the taxes on the amount which we are remitting abroad. Okay, and what is 15 CB? 15 CB is the certificate. Okay, certificate of the chartered accountant that whatever this customer is uh, accepting or declaring in 15 CA, that is correct. That certification will be given by CA in 15 CB form, and it should be accompanied with UD number. Okay. UD number is also mandatory in this. Mandatory. Okay. So 15 CA is the form where the customer will give the declaration in the income tax website that whatever the money is available in my NRO account, whatever the money is available in my NRO account, in that I have paid all the taxes. All taxes are paid. And that will be certified by the CA in Form 15 CB. So for that purpose, we are taking 15 CA-CB form and only for the NRO account. So one more thing that you can remember, in NRO account, if bank is crediting the interest, so wealth tax is applicable. How much is the wealth tax? That is 30%. An NRO person in from any remittance from NRO account, okay, in one financial year, he can send only 1 million USD. 1 million USD can be sent from the NRO account. And there is no restriction in the NRE account. Any amount can be sent. Any amount. Okay. And don't get confused with LRS and this NRO restriction, NRE restriction. NRE and NRO are totally different topic. Okay. So NRE is different topic and LRS different topic. LRS is only for the LRS is for the resident individual. Okay. resident individual who is in India. And this NRO is for non-resident and NRE is also for non-resident. They can send money. They don't need LRS. LRS is for only resident person. Okay. So till now, friends, we have discussed 20 questions. I think the video is also getting so much long and up to 20 question we have discussed. And in the next video, we will continue from the 21st question. Okay. So this series is going to be very helpful for you. So do hit the like button if you are benefited from this video and do subscribe to our channel. Okay, if you have not subscribed, and you can also share this friend with your friends. Okay, you can share this video with your friends who are interested in foreign exchange related topics. And if they are preparing for foreign exchange exam or international trade finance exam, you can also share this video to them. Okay, so thank you, friends. Thanks for watching. Have a nice day.